Hey, good morning, Mr. B. Just a sound check, please. If you could give me the thumbs up, and you should be seeing the inside of a Discord. And once we get that going, we will get started here shortly. Thanks. All right, thank you, everybody. Hey, welcome. Good morning, good evening, good afternoon, wherever you're watching from. Glad to have you here for this pre-market for August the 6th, 2020. We have a full agenda. So the plan on here as of now, it's 8:45 on the dot Eastern time in the US of A. So we're going to try to go exactly onto 9:15, and I will tell you the reason why some of you may need all of those 15 minutes to prepare for the session. So without any further ado, today's topic, we are going to be talking about the importance of print in Flow Algo. So the screen you should be seeing right now, it's a screen capture of Flow Algo. It's inside of the Hangout. I'm going to use this as usual. I'm using material that's handily available to us for training purposes. That's what we do here at Successful Trading. Then the second topic, I'm going to share a missed opportunity on a 20 bagger yesterday. Yeah. And then the last section of the show will be dedicated to how to make up for every single time I've been hearing this week, or you have been hearing for this guy, oh, we miss an opportunity for 10 baggers here and there. It's high time that we got our hand on one of those 10 baggers. Yeah? Without any further ado, let's just go ahead and get started. All right. So the importance of print on Flow Algo. This is a question that I got all the time. My email is full of this. And as I see this question, I answer question people who email me, people who we don't even know. They don't trade with us, but they are curious because Flow Algo is the reason why this channel exists. Flow Algo, it's anybody who goes out there on the internet and they Google the word Flow Algo, chances are they're going to find successful trading video. There are two video. One of them has, I don't know, over 8,000 views now. The other one has, I don't know, 5,000 or 6,000. And there is a blog. There is a couple of articles on Flow Algo that are ranked #1 on Google. So most of you can relate to that because your first interaction with successful trading was by you initiating that search on Flow Algo. There's a lot to be learned about Flow Algo, but for me, I like to keep it very simple because, hey, that's just something that I believe in. So a general question will be, what's the importance of the prints? Yeah. So let me size my screen on here. So one of your fellow traders posted this, as I did. The traders do that all the time, right? We have said, if you are catching us on the internet land, that, hey, do you need to have Flow Algo to trade successful trading alert? No, the answer is absolutely no. Some will even argue that, hey, successful trading AI is more powerful than Flow Algo. I leave that to you for your own review or or characterization. But here's what I want to highlight. Yeah. So this piece of information was shared with us late yesterday, and some of you saw that. Some of you are like, oh, what does it mean? Because if you don't have access to Flow Algo, or the highlight of the information was on the left-hand side, which that I'm circling on here, and which that was highlighted. Hey, there was a some institution bought, because all of these, that's what you need to know inside of Flow Algo. Except the blocks, they have a specific characteristic. But when you see something on here, is that somebody decided to spend their money buying at the ask price. Yeah, meaning that's a hot thing. But then the dates, the dates, it's the interesting thing. Okay, we are August 6, 2020. Somebody's buying January 15, 2021. And look at the price of those. That's why. The reason this thing is expensive is not because options can be expensive because of the strike, if it's in the money, or because of the date. So those two things, time and price, they are the two most important characteristics of an option premium. Yeah. So in this case here, the fact that 280, that's $30 from that, but that's not really that high. It's over 6 months, yeah, from now. Hence, the price per contract is very high. So in this case on here, but the highlight came in here. Well, if somebody presented me this piece of information, I have 4 information here, right? Certainly in this quadrant, I will be paying attention to this line that was highlighted. But my friend, my attention is here to the right-hand side. There is more money spent here than in all of these combined. Yeah? So that leads me to then the importance. So for me, inside of Flow Algo, the first thing that I look first is this. This is what I call equity print. So this is a print on Flow Algo on Facebook on August the 4th, 2020 at the price of $252, 438,660 shares. The total, when you multiply this number by this number, quantity by the spot price was just the price of the transaction, the price of the stock during the transaction, right? It gives you 111 million. Well, again, I repeat myself, 111 million is more than this. So either all of these, we don't know if all of these were done by the same institution, the same people, and usually you may get a sense of that looking at the time. For instance, let's say these two, chances are the same person because it's literally 2 minutes apart. What's the probability that 2 different institutions, they will send in order similar? Actually, it's the same order, believe it or not, my friend. All they are doing on here is splitting it. Yeah. That's what's doing because they need to hide it. So these two, the first two here, they are most likely the same person. This one came in at 1:45 p.m. Eastern. We don't know. And this one is too small enough. This one could be one of you big shot here, right? We know big shot here who will spend 25K on Facebook like that, and they don't even blink. Yeah, and they expire. Actually, they expire tomorrow. 265. This 265 expire tomorrow. So imagine, folks, the person who put 25K here. Let's see if by 97 cents per contract, right? So maybe it's one of you. I don't know. So one of you spend the 25K on here on 265 calls on Facebook by tomorrow because yeah, this was taken on Monday. So let's see if how that transpire. But for me, here's how I use Flow Algo, and the importance of the print for me is that it's as simple as this. Yeah, I'm going to be bullish if the stock is trading above the print. This is what I call the vague. I call that the whole thing is a print, but the price of the print, it's what's going to determine my bullishness or bearishness. Yeah, you can give yourself some leeway. I think recently, I don't know if I was on a training or with somebody, I say 1%, or because there's health fake. So as of now, as of yesterday, I will take a look shortly where Facebook is trading. Facebook was trading below this. So I could care less about whatever options are here because trust me, people on here who do this type of thing, they will lose money. Yeah, or if it's the same person, can they afford to lose 2.5 million if they're gonna turn their 111 million into something else? If they went the other direction with this, because this could be a short. Always remember that, folks. These, we know they are clear bullish because if they tell you calls or puts, right, on the option side. But the lesson this morning for you guys, if you so elect, again, I don't know much. I've only been trading with Flow Algo since 2017. But in any case, there is more reliability by following what's going on the print. Yeah, I know I know that's the one that's I was referring to yesterday before this other print. That's correct, Mr. Wayne. So that print came in yesterday, yeah, at 251 or something. So all that tells us is that there is a move that coming onto Facebook. And since the so-called Telex or Successful Trading AI also told us that yesterday that hey, there is an alert on it. So for us, that's what's making Facebook is a topic of a talk today. So I'm just going to pause for a minute here and take any questions. So what's the importance of the print inside of Flow Algo? You are bullish above the print and you are bearish below the print. It doesn't mean that when the print comes, the stock's going to immediately start moving. Facebook recently, my experience has been that those guys have been very aggressive, meaning that within days. So meaning that, so we had this one on 8.4, we had another one on 8.5. Guess what, guys? By Friday, we're most likely going to see a move on Facebook. And if not, since for us, we are, well, it's only us here, right? I'm not revealing some type of secret to the outside world. Well, You know what to do, folks. You got instruction yesterday on Facebook. Okay, so that concludes topic number 1. And if need be, during our one-on-one, please bring further question on. There is a lot on flow algo, but I'm just trying to make it plain and simple and hard to go about it. Yeah, so that's one. So then topic number 2, without any type of transition other than the quest of making money, is a missed opportunity yesterday. Which day do you look at stock price? As of the print date or the date posted on flow algo? The print date and the date posted on flow algo are the same, sir. Because flow algo, let's say if it is a dark pool that's delayed for 24 hours, Mr. B, flow algo will just tell us that it will give us the day that it got the information. If the trade happened the previous day, the way for us to know that is we're gonna realize that because that price, that print spot or spot price was not traded on the day that flow algo posted it. So that date is the same, Mr. B. It doesn't make any difference. The print date cannot be more than 24 hours away from the date posted on flow algo, Mr. B. Just as of point clarification. But in any case, Mr. B, let's table that. You and I, we can address that on our one-on-ones. No worries about that. I will clarify you with further details. Okay, so I was about to switch screen. Let's go ahead and switch screens and go to, yes, a missed opportunity yet again. Yet again, a missed opportunity on a move that we have been trying to check. I hope that's hopefully is not something maybe in my subconscious, but it's just that they are there. Those things are there. And when I see them afterwards, I'm just like, come on. This was a layup. A layup is something easy to speak English, as my good friend Miss Michelle will ask me. Say it in English, Telex. Okay, so I'm looking for, you guys are able to see it, but I'm looking for it on my screen. I'm looking for a chart of, so let's see, I'm looking for a chart, an option chart that I spent on, it's been under, it was a missed opportunity for yesterday. So what is this? I don't need the Excel. Okay, here it is. Okay, so Disney had earnings yesterday, right, folks? Very quickly on here. Disney had earnings and it gapped up to 123 at the open. I'm not going to switch out on you here. That's all up to you to see. What I'm going to convey on here is that the so-called gangster move, I need a department within successful trading to start giving me naming convention, yeah, and trademarks names. So what's a gangster move? A gangster move is something that's a unique opportunity that happened when there's a gap up, because we want to get cheap option, cheap contracts on both directions, calls and puts, yeah, at a very cheap price, typically between 10 and 15 cents. But depending on the stock, some stocks are a little bit more expensive. Let's say yesterday for which one? Twilio, I think it was Twilio or B1. You could have gotten them for 27 cents and you would have gotten a return of 300%. For me, really, a true gangster move, it's a little bit more than that. Getting them for 10 cents, between 10 and 15 cents. So that was the case yesterday. If you were to do that for Disney on the, let me extend the screen on here. So this is Disney August. Yeah, the best scenario for that, again, this is something advanced. But hey, for sake of clarity, because I trade this, folks, so I don't want to be trading this and then I say next day, oh, I made money, and then somebody tell me, oh, you didn't tell us. Yeah, but this is dangerous. You could lose your money as well. So if I can afford to lose my money, I'm not saying that everybody should be losing their money. So please trade mindfully. Yeah. So the principle is to get both puts and call. Yeah. So meaning that, what does this imply? This implies that if you're going to put both orders in pre-market, if only one of them is filled, please make it a concerted effort to fill the other one manually. Yeah. So just find a way to do that. Does this thing work? Well, yeah. You go to May 8th. There's a video on YouTube on Roku. it works. So there's an instance of that. Where have I used it with success recently? 2 days ago, we took a trade on Mosaic, and the call side, not the same day, we didn't make money the same day, but yesterday, the 16 call that we took actually from 10 cents, it went to 50, no, it went to 60 something. I sold the last batch at 55, but I was distracted because yesterday was just one of those wild days. But you could have sold it for 60 something cents. Yep. So overall, that trade, in terms of raw money, you will not maybe, because 600% with the puts, which you still have, by the way, because I don't sell those puts. I still have them, meaning that if Mosaic stunk today, those puts will be doing something. But I've already cashed out on those calls, and it wasn't great gains because, again, this is a trade that you don't put that much money in. Yeah. So in our rule to say, hey, you want to get 3 contract minimum, and I explain, if you don't know why, my recommendation is that in any trade, if you can get 3 contracts, if you have the capital, sometimes you may not have the capital, and then say, hey, that's fine, I get 1 contract or whatever. But if you can get 3 contracts, you go for 3 contracts. In this case of the gangster trade, so if you are bidding between 10 and 15 cents, that's a maximum of $45 in each direction, right? So in the case of Disney yesterday, the 130 calls you will have gotten a fill at 12 cents. How do we know that? We are reading the low and the high on here. So because you put in that bid before the market opened, that's why in 13 minutes time, I'm going to shut up. And for those who would like to do the one that I'm going to advise today, I give them a cool 15 minutes such that they can implement that trade. Yeah. So from 12 cents, my friend, and when this trade works, you don't have to wait very long, because what happens, and again, we show that in the trading clock, during the first 5 minutes, especially when the stock gaps up or down. When I say gaps, I'm not assuming up. Yeah, up or down, whatever the direction of the gap is. A gap, for those catching us who are not familiar with the lingo, a gap is a jump in price, meaning that we close the previous day at a price X, and then we open at a much different price, higher, much higher, or much lower. I mean, then you have your gaps, 1% gap, 2% gap, 3% gap, whatever the percentage is. Yeah, that's what we're calling a gap. A price change that wasn't traded during the live session. So in that case, this opportunity will present itself on any stock that's optionable. As of now, I invite you. I mean, if you don't have enough trade, or you can create your own system to say, hey, you trade only gangster move. That's your strategy number 1. I can guarantee you that, my friend, if you do that consistently, you're not going to be a poor person, because this thing works. It's just last week there was a miss on while we did that on a Friday on Facebook. Facebook at least gave us entry, but it didn't work out. It was a flat line the entire day. Yeah. And then even Mosaic was a flat line on that same day. That's like mind-boggling to me. Stock gap up 10% and then spend the day in a flat line. Are you kidding me? So in any case, Disney didn't spend the day in a flat line. The whole idea is that the first 5 minutes, there's a price discovery, meaning that the stock, different traders, right? Different people are interested in that stock at different price. During that price discovery, there is a likelihood that the price will vary such that you get your fill in both directions, the puts and the call. Yeah. And the advantage to be trading that on a day like Wednesday, Thursday, I mean, any type of day, but toward the end of the week, because you're going to use the weekly expiration. Yeah. The contract, the options are going to be cheaper. If by now you should be familiar with that. Yeah. So weekly options are cheaper Wednesday, Thursday, Friday. So cheaper, and then a big variation in the stock price during those days will make it that you get colossal percentage move in option trading. So entry yesterday here, 12 cents. 30 minutes later, my friend, worth at a high of $2.27. This is not the first time Disney is doing this. I guarantee you, the reason I took the trade, I spent the time taking the trade in May on Roku, because the same week, I think Intel and Disney did it. So here's Disney doing it twice in a row. I guarantee you the third time that Disney is going to be having an earning and a gap, I'm not going to be on the sideline. À bon entendeur, salut. So before I go, so it is currently 6:05 Pacific time. You are catching a live broadcast of the pre-market analysis on Successful Trading YouTube channel on August the 6th, 2020. Let's go ahead. I'm going to have to switch screen and I'm going to try to see if there are questions before I jump to another screen and share potential opportunities that I studied during the pre-market. Wow, my goodness, fantastic. You have to congratulate yourself, folks. I think this is the highest number of concurrent viewers in pre-market that we've ever had. 20, well, one statistic saying 22, the other one is saying 23. Is this like the US payroll numbers or anything? Okay, I have questions on here. Oh my God, I always have difficulty jumping back into questions because the question were asked much earlier. So let me try to see on here. Just to understand, Facebook closed at 249 yesterday, prints for 252 odd. What is that odd, Mr. H? What if they shorted it? Remember, the prints on those equity could be short. Yeah, I don't have flow algo, so learning from your analysis here. Yeah, you don't need flow algo, Mr. H. So is that simple as that. The information that we shared again is that if we are below, the stock is trading below the print, we are bearish. That's it. No question asked. And we don't have to jump into the trade the next day. We can be patient for the direction to confirm itself. I would strongly recommend that. Is there a time frame when the move happens from the print that you see most, i.e. one day? No, sir. You just said your alerts is at 252, right? So for you, actually, you set an alert to say, hey, if I'm below 250, I'm bearish. If I'm above 254, I'm bullish. And then you rest assured. So let's take care of that. When you say make an effort to fill the order manually, how can you do that? Okay, well, when I say make an effort, you put in an order in pre-market, yeah? If that order is not filled, it's sitting there on your thing. So, right, meaning that you're going to put in a limit price that you know can be filled. That's what I call filling the order manually, meaning I'm going to put in, instead my initial limit price that I want it is going to be between 10 and 15 cents, right? So let's say it doesn't get filled, yeah? But now, let's say the put or the call get filled. I need to go to the other one. The 10, 15 cents didn't get filled because that means that the market price for that option is much higher. So I'm going to buy it. I'm going to force buy it. Force buy it meaning I'm going to put in a limit order suitable enough to get it. Isn't that what you do in the first place? No, yeah, well, what I do in the first place is that, ma'am, I put in an order in with a limit that's really cheap because remember, again, the name of the trade is Gangster. I'm trying to steal this stuff at a very cheap price. They may not want to. Yesterday, for instance, on Square, they never got me that fill because those options for those tracks were going for 50-something cents, and there's no way I was going to risk that. I ask, even though it might seem silly, Gangster trade move. Telex, what is the call put for Disney? What is the call put for Disney? Hey, Mr. Wayne, I was using Disney. That was yesterday. So I was using the example that would have made gain yesterday on Disney. It opened at 123, and the 130 calls were the one that gave that move. I'm not saying to trade Disney today. I'm not sure about the confusion. And again, guys, you don't have to do this. I see a lot of people are spending so much energy on this. Focus on your other trades or anything. This is just something on the side. Now you can tell me, why am I sharing it? I'm sharing it because of an opportunity. But if you don't have the bandwidth, the latitude to handle that, just let it go, please. Because it's going to create a lot of confusion. I really, really repeat that. I'm sharing a lot of things that's here with you guys that sometimes I should refrain from. But then if I don't share them, I know that down the road, that's going to create some brouhaha. 250T odd, as in 252 something. Oh, okay. Sorry, Mr. H. It's UK thing. We're all learning new things, including slang. By the way, who is Jason Bond? Okay, Mr. H, please. Hey, Google Jason Bond, okay? If you see my picture next to his, then I've arrived, or we have arrived. But if not, who's Jason Bond? More seriously, folks, I'm going to switch my screen and give you not one, not two, but three opportunities for the Gangster move today. The probability that we got into, we hit on one, hopefully is strong enough such that by the end of the day we will be all smiling. At least those who take the trade. All right, so I switch my screen. You should be seeing a PowerPoint presentation. So this guy is actually working after hours and pre-market to bring you guys information. Wow, I wish I had such a dedicated uh, trade alert person. Maybe Jason Bond does the same thing. I don't know. Okay, I put my screen in presentation mode, so I'm not sure if you guys can still see me. Okay, I just had to grab my phone and let's see. I need to watch this control screen because otherwise I will be seeing something silly. So let me check that everybody can still see me. Nobody's saying anything. All right, so folks, this morning we bring you not one, not two, but three of them. I have 4 minutes to go through them. You can't do a screen captures because I'm not going to repeat what I'm saying. Oh, oh no, Mr. H. No, Jason Bond. Maybe he's a cousin of James Bond. Maybe. I don't know. No, Jason Bond and Jeff Bishops are two intellects. Anything on Google? No, nothing on Google. No, sir, I do not know anything on Google. I'm unable to answer your question. I did not study Google. Google is not one of my alerts, so sorry. Okay. So let's bring let's bring here. So this morning, at least as at the time when I put together this data may have changed since then. So please bear with me. What am I saying here? This morning, the number one opportunity here is on BHC. BHC gaps in pre-market, it was up 27%. As of now, it's up 17%. So pretty much, if you needed to know anything about it, then it's definitely telling you. So right now, it's trading at $22. Yeah. So okay, so much for that. So $22 is trading at. So August 720 puts, and in this case, I have to adjust this because this price just, hey, they gap it up and it just has been going down. If you ask me right now, the highest probability, my bias is that this thing is just gonna come back to the mean below $20 because that uptrend, initial uptrend is not holding up at all. Yeah, it has lost double of the initial gain that it had since actually I spotted this and I shared that in the hangout. So, but in any case, this is what we are trying to do from $22, $2 in each direction, yeah, for 15 cents. So that's number one on there. Number two, Western Digital. Western Digital has gapped up. Oops. Western Digital has gapped up, have gapped down. My apology. Has gapped down. So it's currently at $39 or thereabout. Yeah. $39. So for us, we're going to say 37 puts and 41 calls. Yeah. I'm hoping that this concept, you can take it and apply it to yourself for future reference. I won't have to be doing this anymore. Yeah. So that's where when I come out and say, hey, I've been getting 10 baggers on this technique called Gangster trade, you are not going to look at me like, I'm holding trades from you. Yeah. Last but not least, our good friend. It will be silly of me having made money in August on this, in May on this, and not to try it again. Yeah. So this is currently trading at 159.50. This one is a little bit more expensive. So, geez, I don't know. This year potentially, I don't know. You could go to 25 cents. Yeah. But in that case, just really be cautious. Do not try to mess with Roku. You're going to lose your money. I guarantee you that. Faster than you think. So from 59 cents, what are we saying on here? We are saying the 145 puts and we are saying the 170 call. Yeah. Again, folks, you don't need to be in the money to make money, meaning that if this thing starts reversing from this down gap down, you don't need to hit 170 for the 20 cents, 25 cents to appreciate in value. And that's the whole thing. And when you see gains, especially for Roku, you take them fast. Well, you take them fast, relatively speaking, because if it's going to be moving, it's going to be moving with brutal force. Okay, folks. All right, folks, that's all I have. Exactly as I promised, it's 9:15, 9:16 Eastern. I think for most of you, it's going to even be a challenge. No, I don't know why it's a challenge. You have the information, so let's flash that info. You still have that information in the broadcast, and you are seeing all three stocks on there with the expiration. They're all August 7. Yeah, I didn't mistype. There is no typo of any type. And that's it, folks. Thank you, everybody. Have a great day, and we will catch you on another episode of Pre-Market Analysis tomorrow, Friday, August the 7th. God willing. Bye-bye.